Since last year, inflation has been climbing at a rate that is much quicker than in previous years. If you had $100,000 at the beginning of the year 2022 and inflation was 6.5%, then the real value of your $100,000 is now only $93,500. Just leaving your money in your bank account resulted in a loss of $6,500 for you. Because of this, wealthy individuals often don't hoard cash but rather invest it in things that will increase in value over time. For example, there is a possibility that house prices have decreased marginally, but on the whole, they have increased greatly since the beginning of the year 2020. Nevertheless, real estate is not the only location where you can keep your money. There are many other areas where wealthy individuals keep their money so that it continues to increase even when inflation is in the double digits. One of the best places to put your money is in gold. And now, for part 1, here are the investment opportunities that are superior than cash. Farmland. It doesn't seem as exciting as a tech company, but at the end of the day, you can eat your iPhone and MacBook to fulfill your fundamental requirements. Farmland is the best bet for meeting those demands. Jeff Bezos is another example. After successfully developing the most successful e-commerce platform, he recently purchased 420,000 acres of property, the majority of which is located in Texas. Since it is said in Mark 21, "Purchase a land, they are not creating it anymore. You should do so." This is a resource that is in short supply. You may wake up one morning to discover that your farmland is worthless, but the value of your crypto stocks may drop by 50% overnight due to an economic catastrophe. Nevertheless, you will never find out that your farmland is worthless. Although they only make up 5% of the world's population, Americans use the majority of the world's resources, particularly food, and as a result, the rest of the world is on the verge of becoming angry. The International Monetary Fund believes that the global economic is at danger of experiencing a food crisis as a direct consequence of the extraordinary interruptions to supply chains that have been generated by the conflict in Ukraine. Because of the war, grain exports from Ukraine and Russia, two of the world's largest exporters, have been suspended. This has led to a scarcity of food on a global scale, which means that the price of oil is not only the factor contributing to inflation throughout the globe. The only things that are certain about the future of humanity are the fact that wars will always be part of the human history, and that the demand for food will never go away as long as there are humans. This is why billionaires all over the world, especially in the United States, are purchasing farmland. When most people think of Bill Gates, they see a tech millionaire who is intent on inventing technology that will completely transform the world. While he was in his 30s, he discovered Microsoft, which went on to become one of the most successful technology business in the world. While one would never associate Bill Gates with farming, the billionaire philanthropist has been quite active in purchasing farms during the last year. He has acquired approximately 270,000 acres of farmland throughout the nation, which implies that he owns more property than is included inside the boundaries of the city of New York. Franchising. The process of becoming an entrepreneur via the purchase of a business franchise when there is already a successful company in existence. If you purchase into a franchise that is already successful in your region, or even one that is on the rise, you may expand your customer base and double the value of your initial investment of $1 million. Depending on the franchise that you invest in, when you acquire a franchise, you also get the rights to the company's name, goods, services, pictures, and any marketing material that goes along with the business. Even if you're purchasing a business that is already established, you should still make sure to do your homework and get familiar with the function that the franchisors play in your company. This is because the franchisor may have more control over the firm than you would want. You will still have a lot of work ahead of you to do. To successfully run a business, you must first build a client base and then work to expand the company. After purchasing the rights to the company, you must next take care of the remaining tasks to ensure the growth of your investment. Marketing. Consider for a moment that you have decided to launch a closed company. It is quite possible that you will be selling something that is almost identical to what everyone else does. Either you're going to be creative and come up with your own design to sell to customers in the high-end market, or you're going to become a reseller and go after customers in the mass market. You are going to have a lot of competition no matter what. Therefore, the only way you will be able to bring in more customers to your business is by presenting your product in a manner that is superior to that of your competitors and is much more enticing to them. This is where marketing comes into play. In today's world, paying for sales does not mean physically being present in the store to persuade customers to make additional purchases. Rather, it means setting up social media campaigns to attract customers to the store by targeting the appropriate people with the appropriate message. This is no doubt that social media has caused a revolution in the business world. As a result of our understanding of the significance and value of the data, the industry will never again be the same. The data that we can acquire that may tell us precisely who is going to purchase what may give the impression that the business is competitive. But this is far from the case in practice, due to the fact that entering this sector does not need a significant amount of investment on your part. A lot of individuals are getting into the game, but very few of them truly know how to generate sales. It is not enough to just throw money at Facebook. Rather, one must transform that money into clicks that ultimately lead to purchases. As it is a relatively young business, it is not going to become obsolete anytime soon, as long as capitalism exists. If we are being completely honest, capitalism is the only economic system that has ever been shown to be successful over the course of human history. Royalties. If you have seen Shark Tank, then you are aware that Kevin O'Leary often discards royalty agreements rather than requesting a larger share of the economist pie. If you have seen the show, then you are acquainted with this practice. It is common knowledge that Kevin O'Leary pursues royalties, but the point that has to be answered is why. When you invest in a firm, you automatically become one of the owners. It is in your best interest for the company to grow so that one day you will either be able to sell your piece of the pie and finally enjoy the fruits of your labor, or so that the company will finally become profitable and share the profits with you. Either scenario will allow you to finally enjoy the fruits of your labor. Startup. You may put $1 million into a startup rather than buying into someone else's idea by purchasing a franchise, if you prefer the notion of starting your own firm to buying into someone else's concept. But before you start doing research on the industry, you need to make sure that there is a demand for the product or service that you want to provide. You should also investigate who your potential competitors will be, just in case other businesses have previously thought of the same thing. Do you see a gap in the market that you may potentially fill? $1 million is a significant amount of money and is more than enough for launching a new business. Yet, if it does turn out to be successful, then you will most certainly want further funding. Because of this, you should draft up a business plan not only to get funding from a financial institution if and when you find that you need it, but also provide a roadmap for yourself to understand how this situation will develop. It is important to keep in mind that you do not absolutely have to launch your own firm. There are millions of entrepreneurs out there, each with their own distinctive ideas. Putting money into them when they are in the early stages could turn out to be extremely profitable in the long run. However, you must proceed with extreme caution due to the fact that 9 out of 10 startups fail. When one of them is successful, it typically makes up for all the others' failures. ETFs. If you are searching for an investment option that has a lower level of risk than stocks, an ETF may be a smart alternative for you. Since a single fund may contain many assets, the money you put in it is already diversified, as opposed to being invested just in a single business. You may diversify your investing portfolio even further by purchasing various exchange-traded funds, which will disperse your money over a wide range of industries. You may invest in real estate exchange-traded funds if you want to make a real estate investment but don't want the responsibility of actually owning a piece of property. Your cash will be quickly diversified among several properties, and you won't even have to manage the properties yourself thanks to this solution. While the value of your asset won't increase as quickly as that of certain technology stocks, they will be reliable. Online products. Products sold online are comparable to excellent music that it's really hard to create it, but once you do, it may be a reliable source of recurring revenue. With the advent of streaming services like Spotify and Apple Music, musicians have acquired access to other revenue sources. You are not, however, restricted to only listening to music. Increasingly more people are purchasing things online, such as courses, presets, applications, software, and a great deal more. And last but not least, relationships. It is possible that at first glance, it does not seem to be an asset. Nevertheless, if you look at it from a different viewpoint, it is possible that it is far more valuable than you now believe it to be. When great individuals from a variety of fields and walks of life come together in one location, wonderful things may and do occur. If you have a concept for a company and you know the appropriate individuals, you can make the process of launching that business a million times simpler. Skills. A talent is not an asset in the usual sense of the word, but having a skill that is continually in demand may be seen in many respects as being equivalent to having a steady source of money. Even if you have to spend some time on it, consider the example of a surgeon. Operating a surgical instrument is a very difficult talent that calls for a significant amount of knowledge and practice. On the other hand, this indicates that there isn't much competition and that you can charge a premium for your service. This is the reason why many surgeons are billionaires, since they are paid so lavishly. Of course, the same principle applies to other professions as well, such as those of doctors, attorneys, and others. Yet, as a result of the proliferation of the internet, some skills such as coding for online sales and programming languages are becoming more important and may be learned on one's own at home. If you don't have enough money to invest in the stock market, you may put that money into obtaining new skills, which has the potential to create much more income in the long term. This is an excellent choice for those who are just starting out on the path to financial success. Dividend stocks. What's the point of having a company if it's not to make a profit, especially when it comes to dividend stocks? Even if the company has a market valuation of $100 billion, it will not be able to survive if it is unable to turn a profit and generate cash flow. This is a fact that cannot be changed. No matter how highly we place a value on a company, if it is not profitable, that it cannot provide value to its shareholders. Moreover, there is no assurance that the company will continue to exist in the foreseeable future. It is what sets dividend stocks apart from the rest of the market, particularly those that have earned the reputation of being the king of dividends. These are the firms that have increased their dividends for more than 50 years. They've weathered wars, recessions, inflations, and just about anything else you can think of. The stock price of these companies does not always do as well as the stock price of technology companies. For instance, not only do they continue to grow at a rate that is often higher than inflation, but in addition, they continue to provide you with the cash flow that you need. Tech stocks. Since these corporations have been able to boost their dividends for more than half a century, what gives you a reason to believe that they will cease doing so in the near future? Because of this, they are among the most valuable assets that you may have in your arsenal. The majority of people believe that investing in the stock market is the only way to make money. However, investing in the stock market is not always the greatest choice. You really have a lot more choices available to you than you think you have. When you have the funds available to invest, the safest investment you can make is on technology companies. Technology stocks appear to be extremely pricey at first glance due to their highest share prices. For example, one share of Amazon costs more than $2,000. However, the technology industry continues to be extremely profitable even during times of economic slowdown. Investing in this industry also carries the risk of experiencing rapid expansion, as was recently the case in the technology industry. Because of the great liquidity of stocks, if you ever feel the need to get out of the market, you will have the ability to sell whatever assets you have at any moment. There is never a guarantee that you will walk away with profit, but knowing that you can liquidate your assets fast may offer the comfort you need to part with your money, enabling it to grow even further.